We've all heard of the phrase buy now and pay later. That sums up the premise of using a credit card. But what very few seem to know is that it's crucial to know how to utilize credit cards responsibly. That being said, a credit card, or even several of them, is not necessarily negative. It's among the simplest ways to start building a credit history. The truth is, credit cards can help you manage your short-term cash flow and are convenient and safe, but they can also cause serious headaches and eventually put your financial stability in peril. So whether you're applying for your first credit card or trying to develop healthier spending habits, how can you avoid debt and use credit cards responsibly? Well, here are my tips, and no school will teach you these. Number 1. Avoiding debt traps. With a credit card, you, the borrower, are allowed to borrow money up to a predetermined amount and repay it over time. You can do this through a minimum monthly payment, a lump sum payment, or a combination of both. Up to that amount, you may continually spend, borrow, and pay back as long as you consistently make payments that keep your account in good standing. But be very careful, because most credit card interest compounds daily, meaning that you pay interest on top of interest, and that interest is continuously added to your debt. Most credit cards enable you to maintain good credit and continue using them with very few monthly payments. This makes running up a balance very easy. But due to high rates, quickly increasing balances, and daily compounding, your balance can soon spiral out of control. While using credit cards responsibly has benefits like convenience, security, and credit growth, you must exercise caution to avoid falling into the credit card debt trap. Even though everyone uses their cards a little bit differently, the truth is that all responsible credit card users exhibit a few common tendencies. Number 2. Cut your interest rate. If you have several cards or a high balance, paying off your credit card debt should be at the top of your priority list. Consolidating your credit card balance may enable you to pay off your debt at a cheaper interest rate. Combining your credit card debt with a personal loan may also be beneficial. Even after a credit card is paid off, you can continue to use it to make purchases, increasing your debt despite your efforts to reduce it. This is true because credit card debt is revolving, which means that even as you pay some of it off, it can still continue to grow. But if you combine your credit card debt with a personal loan, you'd be making monthly payments towards your debt without adding to it, and ideally at a reduced interest rate. Number 3. Use the snowball method to pay off debt quicker. Never heard of the snowball approach? Well, it's all about paying off the account with the lowest balance first. To eliminate the debt as quickly as possible, you should put as much money into this goal account. With it, you'll keep paying the minimum balance due on time for any other accounts to avoid incurring late fees. Add the sum you were transferring to the previous target account to the account with the next lowest balance once the target account has been paid off. Continue in this manner until all your debts are settled. Many people find this strategy effective since it offers minor triumphs from paying off smaller bills, which can give an impetus for taking on higher balances. Number 4. Use cards safely. The biggest credit card risks are identity theft and credit card fraud. Although most cardholders aren't accountable for the unauthorized use of their cards, you still have a duty to protect your information. Review your monthly credit card bills and check your account online more frequently to take proactive measures to lower the chance of theft. Keep your receipts to compare your receipts with your monthly bill and charges. Also, let your card's issuer know if you see any sort of transactions that you don't recognize, and of course, you should always report a lost or stolen card right away. And by the way, many credit card issuers provide text or email alerts when your card has been used. This is one of the most incredible features of using a credit card. Alerts can be set up for several transaction categories, like when your card wasn't actually used, for certain dollar amounts that were used, or when your balance goes above a certain limit. Number 5. Always pay your balance in full. Although this may seem unattainable, there are significant advantages. Interest is not charged on credit card balances paid in full by the due date or earlier. You give yourself an interest-free loan for paying off your balance on or before the due date if you develop the habit of paying the entire balance each month. Note that you start paying interest as soon as you carry that sum into the following month. Moreover, if you have a carryover balance, it can soon grow into a larger and larger balance. That's precisely how you fall into a debt trap which you'd want to escape. Be very careful. Number 6. Regularly check credit reports. Credit reporting organizations generate data about your credit. Your credit score, derived from these reports, is what potential lenders will use to decide whether to lend to you and at what interest rate. Your credit history and credit score indicate how responsibly you can borrow money. Based on this credit history, lenders use a risk-to-reward ratio to give you credit. Your total amount owed, whether you pay your bills on time, the sorts of credit you use such as credit cards, mortgages, other loans, and the number of new credit inquiries you've made are all included in your credit report. Any errors in these could damage your credit score, making it difficult to borrow money at all or increasing the rates. To be on the safe side, it's crucial to examine your report for inaccuracies at least once a year. Number 7. Spend mindfully. It's so simple to purchase anything we want with credit cards, but sadly many of us want more than what we can afford. It's helpful to keep your spending under control, to keep it on necessities, and to buy things you want only when you can afford them. Putting your requirements first and only indulging in wants that will provide long-lasting pleasure will help you achieve complete financial management. Also, by the way, analyze your spending pattern. It would be best to recognize that there is no one-size-fits-all in credit card alternatives before considering them yourself. You, for example, can't imitate your best friend's spending habits. The first step is to evaluate your expenditures and choose a card most compatible with your way of life. Number 8. Maximize rewards. Popular credit card benefits include airline miles, merchandise points, and memberships to upscale clubs. A credit card with cash rewards may also enable you to make savings. If you're going to spend money, you could earn cash back and use it to increase your wealth. Also, if your financial institution allows it, you can increase your savings by automatically placing the incentives into a checking or savings account and into an IRA, brokerage, or 529 savings account. In this manner, you can use your credit card purchases to help you reach other monetary objectives. Number 9. Understand your credit card terms. It can be easier to avoid unforeseen fees and keep track of your payments if you're aware of the intricacies of your credit card agreement. Interest rates and possible fees will vary amongst different credit cards. Read the agreement carefully before using your card to understand when fees will apply, how interest will be calculated on your balance, and when the interest rate will change. Make sure you pick a credit card that matches your spending patterns and financial objectives. The majority of credit cards have annual and monthly fees. Pay special attention to the fee schedule and only select appropriate cards with costs in light of the rewards they provide. Number 10. Don't open too many accounts in a short space of time. Many credit cards are available with alluring terms and benefits, but opening too many credit lines at once gives you additional opportunities to rack up debt. Let's be honest, it takes a fair bit of work to keep track of your spending and pay dates when you have many credit cards to manage. Moreover, opening too many accounts at once may lower your credit score, and applying for many cards in a short period of time may result in denial. Number 11. Keep your balance below 30% of your limit. Your credit score heavily depends on your credit utilization ratio, which is the proportion of your available credit that you utilize. One approach to ensure that the ratio keeps in check is to keep track of the balances on each card. The goal is to maintain that ratio at or below 30%. If you have a $1,000 credit limit, your objective would be to keep your debt at any given moment to $300 and pay it off when your next payment is due. Don't act foolish and spend up to $1,000 on such an account. It will literally mess you up to a point that you'll be really frustrated. Moreover, at that point, it won't be easy to pay that interest credit. Number 12. Stick to cash to reduce credit card spending. Contrarily, paying with cash may be simpler to monitor than using a credit card to make transactions. It might help you cut back on frivolous spending if you only take out a set amount of money each week to spend. To use this strategy, you must determine how much money you must spend daily and stash that sum in your pocket. Although it obviously requires a lot of discipline, it might be worthwhile if it enables you to pay off your credit card debt successfully. There's really no need to always use a credit card at all places and at all times. How about you save money when you really need to? So evidently, a credit card can assist you in building strong credit and financial stability when used wisely. If you take the approaches we mentioned, you'll avoid mounting credit card debt and experience more financial security. Anyway, what do you think of credit cards? Are they something that one should have? Are they really that beneficial compared to the risks that they possess? Comment below and let's engage. That's all for today. Remember to hit that like button and subscribe, and we'll see you in the next video.